We'll hang in there. Interest rates, how about this? They are finally going down. Federal Reserve rate cut short-term interest rates by 0.5% yesterday, and it sent the stock market soaring today. Democratic presidential nominee Kamala Harris celebrating that cut in a campaign statement. She calls it welcome news. But her opponent, Donald Trump, is questioning the timing of the cut, asking whether the Fed's move could be a political one to help the Democrats.
The job market's roughly where it should be. Inflation is getting back down to where it should be.
Look, if the Federal Reserve were trying to influence this election, trying to help Democrats, they would have cut rates 9 months ago.
So it'll be tough to determine if the cut benefits anybody. We'll have to wait until November to find out. But maybe the bigger question on your mind right now is, how is this rate going to affect, the cut going to affect all of us? Joining us now, Drew Kliber, who's a partner with Wild Wealth Management Group. Thank you, Drew, for being here. I appreciate it.
Thank you very much.
Let's start by explaining to people who may not know what this cut is and what it actually cuts. The Fed rate, what is that?
Well, the Fed rate is the top of everybody's minds right now after the 50 basis point cut yesterday, which was a lot more than what people had anticipated.
And 50 basis point is a 0.5%.
0.5%.
But, yeah, I mean, that's a big cut.
Absolutely, a big cut. So the Fed fund rates is the rate that banks use to borrow money from each other. It's all over the news, but not necessarily the indicating factor of mortgage rates and credit card rates and all this stuff. It does influence that, but not necessarily the main factor.
So even though that went down a 0.5 percentage point, it's not like mortgages are suddenly going to fall 0.5% because they're kind of tied to a 10-year treasury, but they are related in a way.
Correct, absolutely. So mortgage rates, if people have been following them, they started dropping kind of late July, early August, based on the 10-year treasury. So the 10-year treasury is about 85% of the mortgage rates, and an extra 15% is, other indicating factors like credit risk and all that kind of stuff for the individual. But they do control mortgage rates to the most part. So I would argue that the Fed fund rate is an indicator, but the 10-year treasury is more important, what people should be watching for the mortgage rates.
Right, but it's nice to see this rate come down because others may follow here. We'll see what happens.
All rates are good. Right. All rate cuts are good.
Yeah, at this point, for sure. Because it's been fairly high. You said it's been as high as it's been, what?
It's a 23-year high.
23 years. Think about that. All right, so let's talk about the other side of things now. Investing. I mean, a lot of people out there, if you have a 401k, the markets love this news. A big rise, a record S&P 500 and record Dow today.
Absolutely. So yeah, with cash being the way it was, and our interest rates being the way they were, cash for the first time in over a decade was an asset class.
So like a money market account or a CD, something that was safe, you were getting good returns on.
Absolutely. But as the Fed starts lowering rates and things go down, then people have to look for a way to get income other than having it in a money market or a CD. And that is going to spur, I believe, the stock market, because when you can't have it in cash, you got to put it somewhere.
Right, and the stock market, you think, may rise here at the end of the year. I mean, you can't predict things, but that'd be a good place to put your money, right?
Yeah, if we all had our crystal balls, that would be a great place. But, okay, go ahead, sorry.
No, I was going to say, and when these rates come down, the reason that Wall Street likes it is it's costing companies less to borrow money, and they'll be more profitable because of that. Is that
Absolutely. Correct? Yeah, anytime rates go down, it benefits everybody, from the corporations to the individual investors to small businesses. All that, when your borrowing costs go down, it comes to the bottom line and more profitability for everybody.
And do you see more cuts coming up to the end of the year? I know a lot of people do.
Yeah, right now they're talking about a 25 quarter point in the next meeting, and maybe another quarter point before the end of the year.
Drop another half by the end
Another
of the year.
half. That's what everybody's predicting. Another half by the end of the year, that's going to be big. That's a big cut.
Drew, thank you for coming in.
You're very welcome. Thank you very much.